What's up everybody? Welcome to the Stocks channel. My name is Corey and today in the stock market we did see some selling in the S&P 500 and the Dow Jones. Is this market rolling over or is it cooling down before the next leg higher? First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, today on SPY we did drop, going down 0.21%, and we did get rejected at resistance yet again at 441. So that's now 3 rejections off of that critical price target at 441, and we continue to see sellers at that level. That doesn't mean we can't break through that level, but it's definitely something to pay attention to, and we are getting very close to our critical support level down here just above 435. So that 20 simple moving average continues to be our strong support level, and below that we could have a quick trip back down to 430 or possibly lower. We still have a small gap to fill right around 435.8. So pay attention to that level, which is just above our 20 simple moving average. Now we still have the bull trend, but we do have price action below the 5 EMA for 2 days in a row. So we're definitely starting to see a little bit of loss of momentum in this bullish trend. The 5 EMA is now negatively sloping, so we don't have quite the same strength of a bull trend that we did going into that resistance level the first time around. So we can definitely see a little bit of loss of momentum getting rejected from that resistance level for 3 times now. So pay attention to a price action close below critical support, because that could mean that the market did top out and we're rolling over. However, you know I always say be objective and follow the price action in the trend. And right now we still have a bullish trend with price action still above 3 of our 4 moving averages. So don't just assume the market has to roll over. It's still possible we make another attempt at that level and we do break through it, which in that case we would be heading up to the next price target at 446. On the triple Qs, we were flat today, going absolutely nowhere, and we did get rejected at that price target at 367. So you're seeing a common theme here where the indices are getting rejected at critical resistance and we're seeing sellers stepping in at those levels. So we did not get a break and close over 367, so that's still going to be our strong resistance. Our critical support on the triple Qs is down here right around 363, and below that level we would lose our critical support and we would likely come back down to 360 or 358. If we lose 358, we're very likely coming back down to the 50 EMA just above 352. So watch that critical support level right around 363, because if we lose that level, we could see a lot more volatility. If we break back above 367, the next price target to watch is just above at 370. We can still see the triple Qs has the full bull trend and the price action is below the 5 EMA for the second day in a row. But overall, the trend is still bullish and we're still above critical support. So it's not time to be panicking, just stay objective and follow that price action. On the Dow Jones, we dropped 0.32% today, and we can also see the Dow Jones getting rejected at resistance yet again, failing to close above 351 and closing right on top of critical support at 348. So the Dow Jones will likely be the first index to tell us if it's going to roll over or if it's going to bounce off this critical support and start heading higher tomorrow. So watch that very strong support level around 348, and if we lose that level, we're likely filling the gap at 346 and retesting the 50 EMA right around 345. If we can break and close over 351, the next price target for the Dow Jones is up here at 355. On the Russell 2000, we dropped 0.5% today, and we still see the Russell 2000 in a bear market. The price action is back below all the moving averages, and we still do have a bearish trend developing in the Russell 2000. So the Russell 2000 is also getting rejected at resistance, but the Russell 2000 is also getting bear rated because it's in a bear market and the bears will short at resistance. So we've seen the Russell fail to close above the 50 EMA for the 3rd day in a row, finding resistance right around that 223 level. The Russell couldn't close above 222 and now it's coming back down to the support at 219. Below 219 we could still have support at 215, but below that we'll see the Russell 2000 breaking down and we'll be looking to see if it can hold up above that 209 support level. We need to see the Russell closing above 223 to scare away the bears and reverse this bearish trend. On the ARKK ETF, we were up 0.93% today, and we did see ARKK closing back above that critical support level at 120, so it's still above critical support, which is good news for the bulls. Below 120, you're looking for support right around 115.5 and 112, but as long as ARKK is above critical support at 120, there's still the possibility it's going back into a bull market. So on ARKK, we need to get a close above about 121.5 to start the bullish trend building back up, and we will have resistance at 128. So watch the breakout level above 121.5 and the critical support breakdown below 120. On the VIX, we did see more fear coming into the market today, with the VIX going up 6.8% and closing at 19.4. The VIX does look like it's building up a bullish trend, and that 20 simple moving average will cross back above the 50 as soon as tomorrow. The VIX did build a full bull trend today because we did see that 20 simple moving average start crossing back above the 50 EMA. So we do have that full bull trend in the VIX, which does increase the probability we're going to see more volatility and more selling. We'll know because we'll see the VIX closing above 20 and breaking out above about 24. But right now you have to be cautious because this could still be a fake out, and it's very possible the VIX does get crushed back down and fails to hold this bullish trend. So watch for a close above 20 to confirm a more volatile sell-off, or a break back down below 18.2 and start heading back down towards 16 for a VIX crush that sends us to new all-time highs. The VIX is very likely going to tell us which direction it's going to break out as soon as tomorrow, so watch it very closely. On Bitcoin, we're currently down just over 2.3%, and it does look like Bitcoin is starting to pull back from that very strong bull run that we saw off critical support. Look for support right around 39,000 and 37,500, and our critical support level is the 50 EMA, which is just above 36,000. It's very likely if this is the real deal bull market, we could retest the breakout level right around 35,700. And if we see a confirmation bounce, that could be a buying opportunity to send Bitcoin to brand new all-time highs in the rest of the year. So look for this bull trend to continue to develop because we're very likely going to see a test of critical support in the very near future. And if that is a successful test of support and we see a bounce and we go into a bull trend, Bitcoin could very likely get a lot of momentum and start running back towards all-time highs. So watch critical support and a potential retest of the breakout, and we still do have resistance above going all the way up to 43,000. It's very unlikely that we're going to get a shallow pullback before going higher, so continue to look for more downside towards $36,000 on Bitcoin. On Amazon stock, we were up 0.12% today, and we still have this huge gap above that won't fill until we get back up to 35.79. We did see Amazon falling out of that wedge after that bad earnings report, but we are holding above that critical support level at 33.11. As long as we can hold above this support level, it's possible we see Amazon start to recover and heading back up towards 3,500. Remember, that will be a strong resistance, and if we can get back above 3,500, it's going to significantly increase the probability we're going to close this gap at 35.79. So watch upside critical resistance around 3,500 and the critical downside support right around 3,300. On Tesla stock, we finally did see that breakout confirmation, closing up 3.27% higher and closing above 692. This does confirm that Tesla is going into a bull cycle because we did see the bullish breakout and we do have the full bull trend. So we have bullish price action breakout with the full bull trend on Tesla. So this will be a buying opportunity on the next pullback. Your possible support levels for buying will be $692 and right around $686 because those will be strong support levels for the next leg higher in Tesla. We still need to close above 714.5 to start running up to our next price target in the 760s. So look for a break above 715 as another bullish breakout, and then we could see Tesla in the mid 700s yet again. It's very unlikely this was not the real deal breakout because of the bullish price action and how impulsive it was. However, if we do start closing back below 660, this could have all been a false breakout and we could see Tesla heading lower. But again, that's very unlikely because we see the breakout on increasing volume. On Apple stock, we were down about 0.25% and we did see Apple closing just below that 20 simple moving average, but holding that critical support level at 145. We still have a bull trend and we could still see Apple bouncing from these levels, so watch these levels very closely. Below 145, we do have critical support at 143. And below 143, it will start to look like Apple is breaking down and coming back down to the 50 EMA at 139. There's still a gap to fill at 137, but we would need to close below 143 to even think about closing that gap. The upside breakout level will be above 148, and then we could start running to our next price target at 156. The financial sector was flat on the day, but still closing above the 50 EMA, so we could see the financial sector getting ready to go back into a bull market soon. The industrial sector was down 0.69% today and closed just above the 50 EMA. We still have the full bull trend, so we need to see the industrials bouncing from here. The healthcare sector was up 0.14% today, and we still have price action above the 5 EMA with a very strong bull trend. The energy sector was down 0.75% today, and we still see the energy sector in a bear market with the price action below all the moving averages and a full bear trend. So jumping back over to the S&P 500, we can still see the S&P 500 is in a bull market, but it's definitely losing some momentum because it cannot break above 441. So this could be a warning sign that the S&P 500 needs to pull back before it can go any higher and try to find more buyers. So watch that critical support just above 435 and that critical resistance at 441. At this point, the bull trend overrides everything else because the price action is still above critical support. So remember to remain objective and stay a bull in a bull market and we don't see any massive waves of selling at this time, and we still have the VIX below 20. So stay objective, it's going to get very noisy out there, and August is typically a more volatile month as it is. So stay objective, block out the noise, and make sure you're following the price action in the trend. Also remember that I have my trade alert service that only trades TQQQs called BANC Trade Alerts, and it's very simple to follow and does well in all market conditions. You get all buy and sell alerts directly via email and text message, and I'm currently running a 50% off promo code for your first month, so now is the best time to try BANC Trade Alerts. I also have the Stocks Channel Discord where I do intraday updates and analysis to help you navigate this market and stay on the right side of the trade. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join by clicking on the links below. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.